Good morning, Team Top Step, my futures family. It's time for the market forecast, or market prep as we call it now. It's changing to the opening call soon. Today is Wednesday, the 26th of July. It's the big day this week, the FOMC meeting today. Should be an interesting trading day, as they always are. And just remember, our focus here is seeking accurate context, always thinking about risk management and remaining patient in our trading. Thank you for joining me this morning. My name is John Hoagland, and we're going to see if what we see in these markets today, just kind of looking at the economic numbers that came out this morning. Mortgage applications were a little bit lower than expected. They were looking for 1.1, while last week was 1.1% higher. It's down 1.8% this week, with the mortgage rate remaining constant and the same at 687. We've got building permits that came out earlier this morning that were slightly higher than expected. We're looking for new home sales, 9 o'clock Central, 9:30 Central on Wednesday, of course, as always, is the EIA Petroleum Status Report. And then the big one this afternoon at 1:30, the FOMC announcement. There's a long list of earnings, just thinking about what the S&Ps, what the equities are doing. They're coming off the highs of yesterday, and kind of a little dip before the FOMC announcement here. They're looking, of course, as everybody is well aware, of a 25 basis point increase in interest rates. If something outside of that happens, look out for some possible volatility. There's always a big drop in liquidity at this time, and when the FOMC comes out. So, be aware of that. Your stops are going to get slipped a lot further than they normally would. With that lack of liquidity, it does bring potential greater volatility. So just keep that in mind. And remember, just because you can trade during economic releases doesn't mean that you should. As far as earnings this morning, we had Coca-Cola beating both expectations, Boeing the same. AT&T misses on revenues just a little bit, and the ADP, both earnings per share and revenue, higher than they were expecting. We know we have Meta coming out at the end of the day today. That's going to be the big one for the late earnings. So we had positive results for yesterday for Google and Microsoft. I think overwhelmingly the earnings have been going pretty well. It's kind of surprising that the equities are lower this morning after those good earnings from those two huge companies, right? But again, a lot of this is expectation, hedging, and positioning for 1 o'clock this afternoon when the FOMC numbers do come out. In crude, upside pressures seem to have eased a little bit after the API indicated a 1.3 million barrel boost in crude stocks here in the U.S. And of course, we're still waiting for the EIA number to come out, which is expecting a draw of 2.3 million barrels. You never know how wrong or right they're going to be on these numbers, and it's extremely difficult to really try and gauge any trading activity off that information, because it seems so often the market price seems to move opposite of what the fundamentals are saying here when the EIA comes out. So be careful there as well. This morning, the VIX is up slightly at 1410. It was 1402 yesterday at this time. The dollar index is down slightly at 101.24. It was 101.4 yesterday at this time. And the yield on the 10-year just a little bit off from what it was yesterday. It's at 3.87%. It was 3.9% at this time yesterday. As always, we ask that you like, share, comment, question, feedback, heckling, love are always welcome here. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. And one note, there's going to be maybe tomorrow, maybe Friday, maybe Monday, there's going to be a break in the market prep. It may be tomorrow. It may not be tomorrow. I'm not quite sure when we're going to do this, but there will be a prep missing in the next couple of days. Don't be afraid. We're doing fine, and we will be back, next week bigger and stronger than ever, bigger and stronger than ever. So just keep that in mind.
Hey there, everybody. As you probably noticed, Hogue has frozen. So I just texted him and told him as much. We'll see what happens and get right back to you on that. The cryo Hogue, very funny. Okay, I'm calling Hogue right now. Maybe I'll put him on speakerphone if it's something interesting. Hey, Hogue. Hey, I think you're frozen on there. Do you want to exit the browser and then try and come back in? Okay. Mm-hmm. Okay, everybody. Here is the story. I'm on speakerphone with Hogue. Hogue, I'm talking to everyone out there. You're just frozen on the screen. Yeah. I don't think they'll be able to hear you. We won't be able to go through charts, but you can just say what's happening, I guess.
Okay, yeah, for unknown reasons, I have lost internet connection. It does happen from time to time. Seems to be kind of coming in and out now, but I'm not getting very strong signal. So my apologies for this, of course. See if we can't get things going here in the next couple of minutes. What do you think, Jack?
I suppose anything's possible, Hogue. We'll see what happens. And in the meantime, use this as our advertisement today for the Comcast Corporation with their very steady internet. So restart your modem, Hogue,
Yeah.
and then we'll see what happens from there. And in the meantime, maybe I'll turn on some slow jams or something over here.
Okay. It looks like maybe we got things coming back here. All right. Okay.
I love this. Everyone's listening to a live IT call between two non-IT people, so we'll figure this out.
Yeah. All right.
Shaw Cunningham, if I play some Zappa, YouTube will take down this video so quickly it'll make your head spin.
Yeah, they will, right?
Yeah. Okay, well, I'll let you. I'll take you off right now. I'll let you do your thing, and I'll tell you what. I'll restart Rendezvous real quick, and then just
Try a different link.
might as well. Is your internet working otherwise?
It is now. It seems to be. It's gone in and out a couple of times, but maybe they've got it figured out here. We'll see.
All right, people. We'll do this in real time. All right, thanks. I'll talk to you later.
Thanks, Jack. Sorry, everybody.
All right. Some weird things may happen for the next few seconds, folks. We're still here, folks. We're just waiting for Hogue to come back. If he comes back. You know, that's a good point about the metaphor for the FOMC today. Maybe it wasn't meant to be that we should be trading today. All right, folks. I think that we're going to bring Hogue back right now. You ready, Hogue?
Yep.
Yeah. You want to share your charts real quick?
Yeah, give me a second here. Okay, share. Oops. Here you go. All right.
All right, MFers. We are back. It finally happened. All right, Hogue. I believe that you are live right now, so I'll let you take it over.
All right. Thank you, Jack. Thank you very much. To apologize for that, ladies and gentlemen. Something happened with my internet. And we're just going to jump into the charts real quick here. I was in the middle of saying good morning to everybody, which I love to do, but we'll get going here with the chart so we can get down to business. One other message here is it is Wednesday. It's group coaching day at 12:30. We can watch the fireworks at 1 o'clock together. Always love these sessions. Please join me. The link is in the chat if you aren't already registered. And so here we look at the S&Ps. We have been calling the current market state or context upside digestion because the market set a range up here and is remaining true to that range. We tested to the weekly kickoff high yesterday and added 13,000 in open interest. So that's probably, again, more positioning and hedging going on in anticipation of what's coming out later on today. Now, we had some positive earnings, prices coming off of that kind of important inflection level, weekly kickoff high, last week's high, and it's really kind of centrally located itself, price that is, in the middle of the digestion range. So the market is just seeking new information, and that is what it is going to be getting today. We're still waiting for new home sales here at 9 o'clock, and then of course the FOMC. So our little tennis player, as I like to call him, is standing mid-court, ready to catch the volley if it goes up or if it goes down. So we're really in hedging mode. The pullback target off the high here would be Thursday's low, which we discussed, the first 2 days of this week, which puts us down to 45.57 for a full rotation of the balance or the range that we're currently in. If we can't hold that, if we are showing some meaningful participation below that level, we've got our big fat round number here of 4,500, which takes us to near these swing highs, which kind of gets us closer to a potential market state change. And I'm not thinking that that's going to happen, but as we always say here, ACH, anything can happen. So we'll take a look at the 30-minute chart here and see what that's telling us, if anything. We've got some overnight inventory to the short side. Remember, if there's a lot of overnight weaker hand shorts here, sometimes they can get a little bit nervous and push price back towards settlement, back to where the open last night occurred to even out that inventory. Are the shorter time frame weaker hands traders really thinking about holding these positions all day long into the FOMC meeting? I think not. With no bad news before then, I would look for this market to kind of normalize and kind of fall into range. Our overnight range is inside the regular trading hour range from yesterday. We actually ended up putting up almost 30 points in range yesterday, which was a little bit more than I was kind of expecting. But at least we got a good test of last week's high, weekly kickoff high, and a naked point of control that comes back to this day here when we put in the high. All right, so overnight inventory to the short side. Are we going to reaccept value? Are we going to see the inventory adjustment back to settlement? It's probably, there is a probability of that. Again, if there's no bad news, these equities markets tend to just grind to the upside, similar to what they've been doing the better part of this week. Here's the TPO charts. So it's a double distribution trend day. We had a distribution of time and volume here, a distribution of time and volume here. We're opening outside of that. So the probability of repair today, it seems to be going by the wayside. It doesn't mean it can't happen. When we open between an assumed point of control in both of these distributions of time and volume, there's a tendency for the market to trade to one or both of them. Opening outside of that kind of changes things a little bit. So we'll watch to see if there is an overnight inventory adjustment, which could put us into repair. And if we continue to reject value from yesterday, there's There's week low here that we haven't checked down to, a week low here. And that, that pullback target 45.57 takes us right down to this level here, which, there is a degree of excess on this day, week low here. These are all just visual targets. If price goes that direction, areas of possible exit or even execution. Let's take a look at the Nasdaq now. So the Nasdaq pretty far off last week's high. No test of weekly kickoff high here. We had, two tech companies, exhibit really good earnings yesterday, and still the market is trying to pull off a little bit here. So again, probably a lot of posturing and hedging for the FOMC meeting. Look where price is located in relation to the weekly kickoff high and low. It's right in the middle. If we were going to call the last 3 sessions a range, it's in the middle of that range. This market is in anticipation mode, likely to be some lower volume here before the FOMC meeting. If everybody's already positioned the way they want to be, you may just see these markets kind of hang around in the middle and, offer smaller opportunities. There will be opportunities nonetheless. Here's the 30-minute chart. So here's the move up yesterday. We did add 3,000 in open interest. How was the volume yesterday? Kind of meh. Not lower, not higher than the previous day, but still not exhibiting any strong directional activity in that volume. And again, that open interest is likely just more hedging. Overnight inventory is to the short side. However, we are still in range and in value. So is there any overnight inventory? No, probably not. I mean, this is where the market opened last night here at 5 o'clock, and we barreled, and we've been balancing ever since. So I'm kind of looking at this as a flat position in short time frame early in the session this morning. So opening in range and in value usually says to me I can stay patient, look for good trade locations as the day goes on. Yesterday we opened above value and we drove higher right off the open. In the S&Ps, we opened inside value and drove higher right off the open. So, everything that we think and that we think about and that we hypothesize can change very quickly. So just be nimble, and patient. And it's kind of hard to kind of say be nimble and patient. Be nimble and patient is almost like being aggressive and non-aggressive. But things can change really quickly, and it's likely that that's going to change really quickly at 1 o'clock this afternoon. So we're just really looking at these markets in the context that we're kind of thinking here. So in range and in value, little change. Centrally located inside the range. Again, try and stay patient. Here's crude oil. So we've got a breakout upside continuation. How is it doing? The breakout 2 days ago above weekly kickoff high brought in some good volume. Yesterday, I would still call this some good volume. And the fact that we added 29,000 in open interest it's pretty impressive, right? There was money coming into the long side yesterday. We have an inside extended trading hour range setting up for us today. Could we be falling into range, digestion, hangover day, whatever you want to call it? Here's the 30-minute chart. So here's the push yesterday. Yes, we added longs yesterday. You can see just in the direction of the market and the relatively large increase in open interest, money was still coming into the long side. We have overnight inventory to the short side. It's EIA day. There may be some muted participation until that comes out. But as long as we're holding above this weekly kickoff 78.20 level, this is an area where I can limit risk. And that's the name of the game for me. and it should be for everyone, is you have to limit risk. You let those winners run a little bit, and you want to cut those losers as quickly as you can once the trade has been proven wrong. And these levels quite often give me opportunities to limit risk, and often some of the bigger opportunities that I actually see. So overnight inventory to the short side, if they don't get what they're looking for, and what are they looking for? They're looking for participants to continue to push price lower. If they don't, then that's when we see our move back to where the market opened last night, which is right here, or even sometimes all the way back to settlement. But again, overnight was inside the regular trading hour range from yesterday, which was largely almost almost the same as the low of the overnight, and then we extended higher. Good settlement last night, 79.63, strong on the upper end of the range. Here's the TPO chart. So a double distribution trend day, an area of time and volume accumulated here, an area of time and volume accumulated here. Where did we open? Between the two areas of distribution of time and volume, there's a good probability that either an assumed point of control here, let's call it the overnight low, is going to be visited, or the overnight high, which is an assumed point of control in the upper distribution. One or both will be visited today. Gives us opportunity, overnight high and overnight low. Now, we may stay inside of that until 9:30 when the number comes out, when the EIA comes out, and then things can change very rapidly. So we'll have to see what happens there at 9:30. Here's gold. So we've got this sticky area here we talked about when we came into it. I said this is going to be a tough area to get through, and it certainly seems to be. Now, we also noticed we have our 100 session and our 50 session moving average kind of enveloping price action so far this week. Yesterday, we have maybe a little bit of a potential reversal day, okay? And we saw a drop in open interest. So some short covering came into the market yesterday. Now, if we start to see new business coming in on the upside, this may actually be proving right now to be a bull flag breakout. Here it is on the 30-minute chart. So we have our trend line here. 1, 2, 3 points of contact. We're now above it. And look what the market is trying to do. Overnight inventory, maybe a little bit long, maybe a little bit of fear of those shorter time frame buyers up here losing money. So we're starting to see the pullback. It did open with a gap. If we can't close the gap relatively early, that gives us an idea that price is being accepted at higher pricing. And if we put in a base, maybe somewhere down here near this 200 session moving average on the 30-minute chart and the 50, this could be an interesting spot for us to look for an execution. Could be a good spot. And sometimes the gap close, if we don't show any acceptance inside the range from the previous day, can also be supportive. So yesterday's high, 200 session moving average, overnight inventory, 50 session moving average. This is a kind of a high target area right here for me. If we get the opportunity, if we can't close the gap, that'll set some sort of structure for us to lean on in opportunities. So here is our gap. Here's yesterday, double distribution trend day, high excess low. This is a big buying tail here. And this is when this is where auctions die. The downside auction died here. It just got too cheap for sellers to sell anymore. Buyers came in and took over and closed the market relatively well with a double distribution trend day to the upside. Take a look now at the euro. All right. So we've been coming off the auction process to the downside has only been getting a C as far as a grade is concerned. We lost open interest the day before yesterday. We lost open interest yesterday. Seeing volume kind of coming off a little bit yesterday. The auction to the downside may be tiring a little bit. What does that mean? Well, we've got an excess low on the daily chart. This long shadow here on this daily bar shows a bit of excess, right? So if we're looking for an auction to die, it's going to die in excess. Now, take a look at this. This is the euro. We've got gaps above. We've got naked points of control above. There's still some weakness down below, but think about what didn't happen yesterday. Yesterday, we attempted to close this previous gap, which we failed to do. We have excess on the low here. Now we've opened with a gap away from this. We've created an island bottom here, an island low. The market gapped down to the day session range and has now gapped away from the regular trading hour session range. If this remains, if this gap remains, then this will be an island bottom, and that can be a relatively strong reversal pattern. But we won't know if we're going to be leaving that island top until the end of the day today. Let's take a look here. So there's our current regular trading hour range low. So I'm going to bring this gap right down there just so we see that there's still a gap. And if we continue to push higher, this may be a pretty good reversal pattern, taking us back higher after a pretty decent pullback here. What's it look like on the TPO chart? Excess, a reasonable amount of excess in the daytime frame at that. Price got too cheap down here and the market turned around and then, attempted to continue to push higher. Here's our gap. We can't close this gap. This is a reversal pattern. We could see this market drive to the upside. Could. We don't know for sure. Here's the 10-year. So again, pulling back off the highs. Last week's high and low are these purple lines here, but weekly kickoff levels are, pretty much where's price? Right in the middle of them. So this market is, again, also in anticipatory state. Take a look at the 30-minute. What are we creating? Did we close this gap? Yes, we did. I believe we have. We'll see better on the TPO chart. So if we've closed this gap in regular trading hours, that takes away the possible island bottom here. That's going to take some of the sting away from the excess from yesterday. And here's the TPO chart right there. Did we close the gap? We closed the gap to the tick. So there's yesterday's, there's the day before's low. Here's yesterday's high. We closed the gap on both ends to the tick. One thing about this profile here on the 10-year is, look at this low. Market didn't finish the downside auction yesterday. There's no excess on this low. No excess. We got excess here, but now we're kind of holding price above it. We had to fill this. We had to fill in this gap. If we get into the value area, a value area special situation play could come into play, and that might push us to go check the week low from yesterday. And you can see that there's still unfinished business, perhaps in these naked points of control down below, if that is the target. There's plenty of naked points of control targets on both sides of this market. So, this is a interest rate sensitive product, and we are going to be changing rates today. If anything unusual happens, look out. Look out. All right. Okay. So I apologize for my internet. That hasn't happened in quite a long time. I'm severely hardwired in, so that had to be something down the line somewhere. And we'll look forward to.
They're moving.
Yeah. What's that?
The gremlins are moving.
Yes. Yeah.
One question that came up, Hogue, is
yes.
Where can folks send their questions for group coaching?
You can send those questions to me at this email address, jhoagland at topstep.com.
And then one very last thing. Someone was asking about what products can they trade. I am posting that link through the magic of the internet right there.
Thank you, Jack.
That's all from me, Hogue. You do your thing.
All right. Well, remember, likely some subdued participation here before the FOMC meeting comes out. Again, just because you can hold positions into major economic releases doesn't mean that you should. I don't do that anymore. I've taken enough big positions into major economic releases. I've lost a lot of hair, and most of it's turned gray because of it. And if I total up the profits and losses from those attempts, I'm about even. So I choose not to participate in them. It's to each his own, of course, and we will look forward to another day. And that's what our goal here is, to survive today, profit today, add to your account today, always trade for tomorrow. Make sure you're prepared for the trading day. Make sure you review your trading day at the end of the day. Remember, it's prep, trade, reflect. So we'll look forward to seeing you maybe tomorrow. Again, there may be a day here in the next couple that there won't be a market prep. Apologize. I will miss you, and I'm looking forward to seeing your success. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Get out there and profit, and we'll see you later on.